All right, we've got Starbucks earnings out. Shauna Smith digging through the numbers here. Shauna, what do we have?
All right, Akiko, looks like a pretty strong report here from Starbucks. We're looking at slight gains, actually oscillating here just a little bit in extended trading. A beat on both the top and bottom lines here for Starbucks, 74 cents a share. The expectation was for 65 cents. Taking a look at revenue, $8.7 billion. That beat the street's expectations of $8.4 billion. Also, overall comp sales, that coming in better than expected, 11% jump here. The estimate was for growth of about 7%. In terms of what's driving it, Starbucks saying that it was driven by 6% increase in comp transactions, also a 4% increase in the average ticket. We talked about the fact that Starbucks is one of those names that has had pricing power. They have been able to raise prices. Consumers have been up until this point willing to spend, willing to pay those higher prices. Certainly that seems to be the case in this latest report here. Also just breaking down that overall comp sales number just a bit. In terms of the U.S. comp sales, growth of 12%, that coming in better than what the street was looking for, of a gain of just about 9%. And international comp sales, that growth of just about 7%. So beat here on both the top and bottom line. Overall, comp sales up just about 11%. So certainly looks like a strong quarter here for Starbucks.
Yeah, you point to those international numbers that we got to. Certainly China, a big part of the business there. And we are seeing some reversal, at least in the same store declines over in China. That's got to be helping the cause, too, although we are seeing the stock down about 0.7%, so reversing just a bit, but not a significant move on the back of it. And Shauna, it is interesting, as you point out, anytime we look at some of these food and beverage companies, the Starbucks certainly a big one. It is kind of an indicator of where the consumer mentality is right now, especially in the face of inflation and how sticky that's going to be. Are they willing to shell out extra money even with the price hikes, at least based on the numbers that we got right now? It certainly feels like that's still the case, at least for Starbucks.
Yeah, it certainly has been the case. It seems like it is the case right now. I think a lot of the focus is going to be on exactly that on the earnings call, what the trends they are seeing so far this quarter, because we know that there has been that rising risk of recession in the second half of the year. The macro picture has not really improved substantially. If anything, we're seeing more and more consumers pull back on some of their discretionary purchases. So whether or not they're seeing any signs that that is going to be something that analysts will want to hear a little bit more about on this call. But when you take a look at Starbucks' performance since the start of the year, the shares up just about 15%. So maybe a lot of this good news already baked into the stock price. Maybe that's why we're not seeing more of a reaction here in extended trading. I also want to note that the new CEO there at Starbucks saying that he's very pleased with the reinvention progress so far of the company. And also Starbucks reporting U.S. rewards membership up 15% here to 30.8 million members. We know that loyalty program, rewards program has been so critical in order to drive and keep that momentum going in Starbucks sales.